US shares dipped in overnight trading in a timely reminder that markets rarely go anywhere in a straight line. And despite the fact that the macro settings basically didn't change and the reports that we saw were generally positive, the market took a bit of a breather in overnight trading. The pressure that we saw in European trading fed into US trading, most of the major indices finishing down by 0.25% to 0.5%. So a healthy pullback in an otherwise fairly strong uptrend in US markets at the moment. Most of the big tech stocks were under pressure. Clearly, they're vulnerable to profit taking any time investor sentiment slips, and that's exactly what we saw. And although the markets were only down a modest amount as measured by the broad indices, the tech sectors, particularly semiconductors, were directly affected, and most of the big tech stocks were down by more than the market fall of around 0.5%. The exception was Tesla. It was up 2.8% near a technical breakout on the charts. That is, if it moves up through that level, around 365 to 370 and breaks through it, the technical outlook for Telstra will be very strong. Of course, it's not there yet, but a volatile stock like Tesla can get to a point like that in very few sessions. So it's one that's on the radar at the moment, despite the fact it's yet to break out. There's also a recovery aspect there. A lot of shareholders pleased to see the CEO back in the factories. Rumours going around that he's back sleeping on the factory floor. And while I doubt that one myself, it does go to show the belief that's rising that the attention of Musk has turned back towards Tesla, and that could be a positive for its earnings outlook, despite his claim at the most recent quarterly earnings report that there could be a tough few quarters coming. Investors still impressed. Tesla's still on the rise. The big macro news last night, I don't know that this was news, but the news that came out of the White House was that the China tariffs, those 125% impositions on trade between the US and China, have been deferred for a further 90 days. I think this is now the third deferral. The phrase taco is getting another good run, that Trump always chickens out on tariffs. It does look very much like the threats of tariffs are merely a negotiating tool for trade terms and not the existential threat that markets feared in April. The market really just shrugging off the news about this deferral of tariffs. In crypto space, we've still got a big focus. Bitcoin moving up back again towards those highs, currently trading above 118,000. But the big feature lately has been Ethereum. It's heading back to its all-time high hit in 2021. It crossed US to 4,300, and it does seem to be enjoying some pretty positive momentum at the moment. So looking at outperformance from Ethereum, that could mean if selling across the crypto space, it will outperform, and the rising crypto market could be one of the market leaders for some time. There is an argument here, and I'm no expert, but according to experts in the space, the technology and the platform that Ethereum employs and the coin itself, Ether, is a powerful advantage in the crypto space, and the recent trading in Ethereum does appear to support that. Yesterday, we had a stronger day across the Asia-Pacific region, gains here in Australia and in Hong Kong. We had a big rally in those lithium miners. They're back in the spotlight. Now, this was a space that had a lot of hope, particularly around battery technology 2 years ago. And of course, we had that terrible wipeout and the disappointments as the demand and take-up was much less than expected, and the difficulties in mining lithium became more apparent. But it does appear that we're looking at lithium 2.0 now, and the more solid outlook for the minerals is aided by the news yesterday of a mine closure. Now, this mine is significant globally and it produces about 3% of lithium, but that may not be the difference in the global markets, particularly with so much new supply ready to come online. But nonetheless, it's had an immediate short-term impact. Stocks like Pilbara up 20%, Liontown up 18%, Mineral Resources up 12%. So this was a sector-wide rally, and it came against the backdrop of support generally for mining stocks. Gold stocks have been in the news recently with that big move up in the gold price. Now, the big almost 3% fall in gold overnight might see that reverse, but lithium markets have held up and global miners have held up as well. So although we could well see pressure on gold stocks today, that support for lithium and the global miners might mean the overall outcome for miners remains positive despite that pressure from falling gold prices. We're looking at some key reports today. JB Hi-Fi was down 8.4% after reporting yesterday. This is a very curious move. move. JB Hi-Fi reported a 10% increase in sales. The overall numbers that dropped with this result look very impressive, particularly in a more difficult retail environment with fears about interest rates and inflation. And yet JB Hi-Fi have delivered once again. And I think it's fair to say on their track record, JB Hi-Fi are one of the most successful retailers in the Australian landscape. Now, I think the reason for this big fall was that the long-term CEO, Terry Smart, announced his resignation, and that is certainly a blow. But he has put in place a good succession team, and the proof of that is that the new CEO is the former Chief Operating Officer, and so we can expect continuity across JB Hi-Fi. Add to the fact that not only did they increase their dividend by 5.4%, but they also declared a special dividend, both of which are fully franked. I suspect that this might be a short-term reaction that we're seeing in JB Hi-Fi, and the numbers that they released yesterday could form the basis for a new higher level for JB Hi-Fi's share price, one to watch very closely in trading today. Iris also fell 7% yesterday after a potential takeover bid from Blackstone was announced in the previous trading session. Its shares had rocketed higher, and the reaction yesterday, I think, was just that, a bit of a pullback after some exuberance in the share price, nothing to do with a change in the company itself. Block also rose on Friday, but was down 9% yesterday. It does look like volatility has returned not just to the market, but to the buy now, pay later section. But more importantly, getting to reports coming up today here in Australia, we have Life360, the software supplier and app, and Coronado Global, the coal producer. Now, this one's an interesting mix. Its share price has plummeted from $1.45 to around 25 cents. And this comes at a time that metallurgical coal prices, coking coal, has been well supported. So clearly there's been some concerns about this company in particular rather than the outlook for the underlying commodity. But we're now seeing a bit of a bottom in place. Coronado reporting today, if it's a good report, there is potential for it to springboard higher from those reduced share price levels. We also, of course, have the tail end of the reporting season in the US tonight. We have CoreWeave pre-market and then Circle aftermarket. Both of these stocks are recent listings, and this will be the first time investors get a chance to look at their books as listed entities, and market reactions could be impressive, particularly given the volatility we've already seen in both of these stocks. That's CoreWeave and Circle. But the big news locally today will be the RBA rate decision due at 2:30 p.m. East Coast time. Naturally, with the whole market on one side of this equation, the only potential market or likely market reaction would be from a shock. In other words, if they do deliver a 25 basis point cut at the meeting today, the RBA board will be meeting market expectations almost exactly, and we wouldn't expect much of a market reaction. But a cut of more than 25 basis points, a 50-point cut, and there has been speculation, and I stress speculation about that, could see a boost to the market. If the RBA were to shock the market by refusing for a second month in a row to cut, the action in the market could be much more severe and would likely bring about a sharp reassessment of the outlook for company earnings and the market broadly, and possibly a pullback in the Australian share market.